Namaskar everyone. Today on the Market Makers show, we have with us Mr. Niranjan Avasthi. He is a senior vice president at Edelweiss Mutual Fund. He heads product and digital marketing initiatives at the fund. Edelweiss Mutual Fund is launching an NFO, which is a new fund offer, and it is in a multi-cap fund category, which will be investing, monies in large, small, and as well as mid-cap stocks. So, welcome Niranjan.
Thanks, Milan. Great to be here.
Thanks. So your fund, presentation calls it as Sarvagun Sampanna. Could you please tell us the rationale behind this multi-cap fund and launching it at this juncture in the market when markets are at lifetime high?
Right. So, before coming to the category, let's talk about, and let me answer your second part of the question, which is, all-time high. See, India story is so lucrative and so appealing today that we will keep creating new highs each time. In fact, over the last maybe decades, if you see, India has been making new highs and there's no stopping. Today, as we speak, India is in its one of the best times. I would say one of the best decades of transformation and creation of wealth. It's kind of Goldilocks kind of situation for India. Many sectors together are firing after a long decade. Earnings growth is very, very good. India probably is one of the largest, not only largest, but youngest population on earth today for any country. And this will be there for a couple of decades to come. For long, almost till 2055 or 2060, India will have a huge working population, roughly around 55 to 60% of its population on an average over this next 30 years will be a working age population. This, presents a very, very good story for all equity investors because this will unfold into huge consumption boom, huge premiumization boom, huge investments into stock market, mutual funds, and many other sectors. If we talk about our banking sector, which is core for any country to grow, it's it's in the pink of its health. Be it PSU banks, be it private sector banks are ready to lend. They are well capitalized. In India, the household debt or overall debt, private debt, is also very low compared to many of our peers. So credit is yet to be, leveraged well in this economy. So all this together, it's a great story in making. And even if we talk about, all-time high market, I think so. Valuation per se, we are just closer to our, long-term averages, be it on the forward earnings basis or any other metrics. So, I think so a lot more juice is left and we are just started to, enter into this bull run, I would say. But yes, from investors' point of view, one thing which is required to play India story is patience and serious confidence on the India story.
Interesting. I like your point about premiumization, and as you said, there is whether the markets may be at all-time high, but over a long-term perspective, there is juice left. Now let's talk about the portfolio construction strategy that you have for this particular fund, and what would be the allocation to each category and reasons behind it.
Right. So before that, let me also introduce multi-cap as a category. We have various equity fund categories in mutual funds. Within that, if someone is looking to invest across market cap, be it large, mid, or small, there are particular 2 to 3 categories. One is flexi cap category, one is large and mid cap category of funds, and the third one is a multi cap category. Now, multi-cap category has a structural advantage because by mandate, these category of funds needs to invest minimum 25% each in large cap, mid cap, and small cap. So what happens is by mandate, you have to invest 50% into mid and small. Whereas Whereas other categories, be it flexi cap, there is no such mandate, and hence largely, if you see flexi cap funds have 60 to 70% exposure into large caps. Now here, multi-cap versus a flexi-cap, it has a structural edge because in the long run, we know mid-caps and small caps will generate alpha, will generate excess return over large cap, and hence there is an edge. If we just compare a multi-cap benchmark with NSE 500, which is a kind of flexi-cap benchmark, there is a 2% alpha generated by a multi-cap index just because of disciplined asset allocation and putting 50% into mid and small. Hence, this category has a advantage over many other categories of funds when it comes to generating excess return over the long run. So our fund, which is Edelweiss Multi-Cap Fund, will also follow this mandate, of course. But what we will do slightly different compared to the benchmark or compared to the mandate is we'll have roughly around 35 to 40% exposure, 35 to 45% exposure into large cap, 25 to 35 into mid cap, and 25 to 35 into small cap. So if you take midpoint, which is average of all these three, roughly 40% will be large cap and 60% will be into mid and small. So by that, by design, if you see, it will have slightly higher tilt towards mid and small because we believe that in the long run, this will definitely generate excess return for investors because in which case you take most other funds, they are overboard on large cap. Apart from mid and small funds, flexi cap or large and mid cap funds, they have a higher allocation to large cap. So we want to give a fund which will have slightly, tilt towards mid and small. And this is how broadly we would, like to construct the portfolio for Edelweiss multi-cap fund.
Got it. Okay, and could you also briefly talk about what would be the parameters that you would consider, fundamental parameters that you would consider in terms of selecting the stocks, and would these parameters differ based on market cap?
Right. So broadly, of course, when we look at mid cap versus a small cap or versus a large cap, the way our fund managers look at these businesses, look at various ratios, growth aspects would differ. But broadly, while selecting any stock at Edelweiss Mutual Fund, we follow a very disciplined, process-oriented approach for bottom-up stock picking. We call it FAIR philosophy. F stands for forensics. So what we believe is before buying any stock or even considering doing a forensic analysis in terms of the quality of their balance sheet, quality of their disclosures, the quality of management is very, very important. So first filter for us is doing a forensics of the entire universe and then come down to stocks which get, I would say tick mark on most parameters and are good in terms of forensics. Second, we look at businesses which are available at acceptable price or reasonable price and have a fair amount of earnings growth ahead for them. We don't look at short-term earnings growth, what is next 1 year, but we look at the medium-term earnings growth because that is where, value is there and, returns are made. So we look at acceptable price versus the growth opportunities that a business presents. We look at robustness, and broadly our philosophy is we are growth or value style neutral. So we don't tilt only towards value. We don't tilt only towards growth. What we believe is over a longer period of time, if you have a good stock picking ability, there will be or there are opportunities to be made in growth stocks, as well as there would be times where you make money in value stocks. So our overall philosophy, our FAIR philosophy, is what we follow while picking stocks, be it large cap, mid cap, or small cap. As far as mid and small is concerned, the additional things which we look at is liquidity, the promoter background, how the business has done over multiple cycles, because some of these businesses are very cyclical and we don't want to burn our fingers or in our investors' money. So we look at cyclicality of these businesses and then buy them. As far as mid caps and small caps are concerned, we run a very successful mid cap strategy for last 15 years. The performance of this fund is, very, favorable for our investors. It has been proven very favorable. We have generated alpha over benchmark and also done better than most of peers for last 15 years. So that expertise is where we believe will help us manage this multi-cap fund, because it will, as I said, it will have roughly 60% into mid and small on an average. So it will have a higher tilt. So having expertise in managing mid and small, or picking the right stock at the right time early in the cycle, is very, very important, which I think so our track record showcases. So this is how broadly, a long answer to your short question, but this is broadly we will select stock and manage the portfolio. And this is our framework, which is fair.
Interesting. And returns and risk are two sides of a same coin. So what checks would you have in place to manage risk in this fund?
So broadly, we have a very robust risk management framework, which hinges on 2-3 aspects. It is basically, when we buy a mid and small, particularly, as I said, doing forensics is part of our risk management. It is a pre-mortem rather than post-mortem. Then we look at liquidity. Apart from that, we have, sell disciplines. When you sell a stock is very, very important. As a part of, risk management or greater transparency, we also talk about what we don't do in a fund while managing that fund or a mandate. We don't take cash calls, because our mandate is to manage money and invest and find right opportunities at different points in time in the market. So we don't take cash calls in any of our funds, and we won't take even in this fund. We usually don't take macro calls. Our fund picking ability is, or stock picking ability is, purely bottom up. So we don't take macro calls, because there is a risk of getting caught into a wrong cycle by taking macro call. We don't take outsized sector bets, because that also becomes too cyclical for a fund's performance, and there is a risk that you may get caught on the wrong side. So we don't take cash calls. We don't take extreme sector bets. We don't take macro calls. It's also somewhere a part of better risk management.
Agreed. And so I understand that you may not take macro calls, or you have a bottoms up approach, but any particular themes that you are excited about?
Yeah, definitely. So at any given point in time, our funds would definitely be overweight on certain themes. And these themes, may be playing out in the macro, but they are purely identified using bottom-up analysis and doing in-depth research. So some of the themes, which we are overweight currently, is definitely financials. As I said, financials have been in the pink of their health in last 2-3 years, and we expect that the credit growth in India is yet to be leveraged. There is huge tailwind for credit growth in India, be it on the consumer side, be it on the capex side. And financials, especially lenders, is where we are overweight. We believe that over the next couple of years, there could be a huge opportunity to make money in this sector. Second, we are overweight on China plus one as a theme, because there are a lot of opportunities moving out of China and also coming way into in India. iPhone is just one example. iPhone 15, people are flashing that made in India. It's a proud thing for India, but this is just started. We manufacture probably less than 2% of overall iPhones being manufactured in the world, but this has started. So manufacturing, led by China plus one kind of theme, is also one area where we believe there will be many good opportunities, and we are already overweight across many of our funds. Real estate has come out really well. Last 10 years have been really dull for real estate as a theme, but for a country which has highest population, huge migration from rural to urban, uh, almost 500 million people will be added to middle class or upper income group. There are aspirations to have their own house, own homes in urban areas. We sit in Mumbai, I think so. Every individual wants to buy his house, his or her own house, not one, but also two. So that is a big theme. We are playing this theme through building materials, premiumization, home improvement as a theme. Uh, and lastly, defense, the way uh, in last few years we have seen indigenization of defense as a theme. Defense procurement are now 75% made in India. Uh, that is another theme where we are overweight. So broadly, these are a couple of themes which we believe would do really well in coming years, and we are broadly overweight across our funds, and probably would be overweight in this upcoming new fund, which is Edelweiss Multi-Cap Fund as well.
Got it. I'll quickly, for the benefit of our audience, I'll quickly summarize the themes that you mentioned. First is the banking, which provides a huge liquidity to any fund. Second is China Plus One, which probably, iPhone as an example has just started showing grassroots or rather green shoots. And as you said, real estate and defense. So pretty interesting. Now, let's say if we were to take if an investor wants to take a 1 year investment horizon, what positives or negative factors do you see in the Indian market?
Right. So broadly, over the next 1 year, of course, it is quite difficult to predict 1 year in equity. Long term, we all know, India would do well. In next 1 year, I think so. There are certain key events like elections would be there, which may add some volatility to the market. What's happening globally also impacts us because we are very closely linked to global. Of course, in long run, India has kind of decoupled with many developed countries, and we have been outperforming. But in the medium term or in the short term, I would say 1 year is a pretty short term, period if you talk about equity. So what happens to US, how the economy recovers, even what happens to China, because China is on the verge of recovering, will impact to some extent our market. So these 2-3 events, I would say, are known unknowns in terms of risk. In terms of positives, I think so. The earnings growth which we are seeing in India is absolutely robust. For continuous 3 years, we have seen double-digit earnings growth. It has come after a long gap of almost 7-8 years. And we believe, I think so, the numbers or the management commentaries which are coming, earnings growth will stay robust, at least in sectors which we just discussed. So that is one very good positive. I think so, reforms, the way the government has been able to continue on its reform track, the way businesses are showing confidence, the way businesses are reinvesting their capital and creating new capacities. I think so the overall situations or all these are positives for equity market over the next 1 year.
Very well summarized. So thank you, Niranjan. Thank you for taking out time for this session and, guiding our viewers about not only about your fund, but overall, themes that are shaping up in the Indian markets.
Thank you, Milan. Glad to be here with you. I hope it was useful and it will be useful for your investors. Thank you.
Thank you. All the best for the fund that you call as Sarvagun Sampann.
Thank you. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.